Welcome to Research in Motion. My name is Thorsten Heinz, Chief Executive Officer. RIM is a publicly traded telecommunications and wireless equipment company based out of Waterloo, Ontario. Mike Lazardus and Doug Fragan founded the company in 1984. RIM produces software, hardware, and service solutions for wireless communications devices. Our products are located in over 175 countries worldwide, and we are recognized as a global leader in our field. In 1999, we released the BlackBerry mobile device, which instantly became a commercial success. The product has since evolved and paved the way for the smartphone industry. Furthermore, our product offered clients the unparalleled ability to send and receive emails and messages instantly with the aid of our full QWERTY keyboard. BlackBerry has quickly become a must-have for business and corporate types. RIM has provided employees and employers with the ability to work away from the desk while keeping the office conveniently in their pocket. In 2011, we released the BlackBerry Playbook, which has yet to hit its stride in the market but offers a copious amount of promising possibilities. Let's go to Cindy with a detailed SWOT analysis of our company.
RIM possesses many strengths due to its vast wealth, large customer subscription, and highly skilled employees. They have a dwindling but very devoted customer base that has remained loyal to them throughout the past few turbulent years. Despite the loss of market share due to competitive products manufactured by Apple, Samsung, Google, and others, RIM has gained momentum in emerging markets like China, India, and Africa in order to make up for North American sales and revenue losses. RIM has a strong corporate culture and is among those companies who continually seek to improve their product quality. RIM's weaknesses have grown over the past few years with their poor product quality, international competition, and unreliable services. RIM is a high spender, which is not beneficial for them, especially in their current financial conditions. RIM targets a small market role with high-priced product. Therefore, they are extremely dependent on a specific demographic. In addition, RIM lacks in the applications market, which grosses millions of dollars and has become uncontrollably popular. From a technical standpoint, RIM experienced what is considered the worst server issue in history, which has brought many questions forward regarding their reliability as a service provider. RIM, despite recent issues, still maintains many opportunities. RIM must continue to develop in the emerging markets where they currently dominate due to low prices that most competitors do not match. Foreign markets will provide RIM with a great source of income and can help subdue the North American deficit. Moreover, RIM must use their current assets toward research and development to continually reproduce, revamp, and remodel their devices in order to match the constant updates seen in companies like Apple. RIM's threats are represented by competition, income loss, lack of investments, decreasing demand, and availability of substitutes. Competition has hurt RIM for the past few years with the creation of the iPhone and Android. Consumers are shifting interest towards these smartphones that possesses greater and more advanced technological abilities. In due time, emerging markets that BlackBerry is so heavily invested in will accumulate the wealth to afford available substitutes. Due to the huge loss investors experienced as a result of the stock price drop, most investors will shy away from RIM and rather opt to purchase stock in competing companies. If RIM fails to secure investment capital, then along with their diminishing income, the firm will face great problems with attaining the necessary funds to continue production without burning through their cash reserves.
The following information provides a general idea of the financial condition RIM is currently experiencing. The solvency ratio measures the financial risk of a firm. There is both a short-term and long-term ratio. The short-term ratio of the second fiscal quarter of 2012 was 1.93 and has since improved to 2.2 in the second quarter of 2013. The long-term debt-to-owner's equity ratio of the second quarter of 2012 was 41 cents and is currently 33 cents, which signifies an improvement. The two aforesaid values have bettered in this fiscal quarter because RIM uses little or no debt in their capital structure. Therefore, their current liabilities and long-term liabilities are extremely small, allowing them to retain and develop their assets. The profitability ratios measure a firm's overall financial performance in terms of its likely profits. The ratios belonging to this category are return on equity, return on sales, and earnings per share. Return on equity of the second quarter of 2012 was 3.3% and fell in 2013 to negative 2.5%. Return on sales of the second quarter of 2012 was 7.8% and fell in the second quarter of 2013 to a staggering negative 8.1%. Earnings per share in the second quarter of 2012 was 63 cents, whereas in the second quarter of 2013 it is negative 45 cents. However, keep in mind that earnings per share were nearly $2 1 year ago and have dropped $1.50 in the past 6 months. This data corresponds with the $70 billion loss investors incurred. RIM's most recent fiscal results depict a forthcoming layoff of 5,000 employees and a GAAP net loss of $518 million. RIM shares subsequently fell to $7.39 compared to its $150 price of 2008, while its market share took a tumble to 4.8%. The revenue of RIM in the second quarter of 2012 was $4.16 billion and in the recent fiscal quarter dropped to $2.87 billion. Cost of sales and gross margin both decreased by $400 million and $900 million respectively.
RIM began to gain a lot of momentum at the turn of the century when their smartphones generated popularity in the non-business sector as well. RIM was named Fortune's fastest growing company of 2009 as their sales and net income tripled those of 2 years previous, while their profit grew to 84%. The company underwent massive expansion, increasing to nearly 20,000 employees and experiencing 9 straight years of revenue gain. In 2010, RIM had secured 10.4% of the respective market. That year, they announced the upcoming release of the BlackBerry Playbook, which was envisioned to be the main competitor to the Apple iPad. Even with the emergence of competitors such as Apple, Samsung, Nokia, and Google, BlackBerry was atop the telecommunications and smartphone device market. In 2012, RIM experienced a net income loss of over $2 billion and a sales drop of 31%. The company sold approximately 7.4 million BlackBerry phones this past quarter, while Apple sold 5 million iPhones in its opening weekend. The decline, however, began in the first fiscal quarter of 2011 when RIM stock plummeted to its lowest point since 2006, and shareholders incurred losses of $70 billion over a span of 3 years. Mainly, this astounding loss was a result of their service outage that lasted several days, affected tens of millions of users, and caused a total shutdown. Thousands of employees were laid off as a result of shrinking sales and a market share loss due to Apple and Google, who recently released the Android device. The BlackBerry Playbook quickly became a commercial bust, adding insult to injury. Many RIM executives and financial analysts are expressing optimism, however, toward the forthcoming release of the BlackBerry 10, which possesses a dual SIM function, allowing its owner to separate business device from their personal device. The release of the BlackBerry 10 is highly anticipated, for its success may be the ultimate tell of RIM's future survival or demise.